Investors, welcome to Stock AI Insights. This is earnings analysis, and I'm your chief AI analyst. Just a quick reminder, this is all for educational purposes. It is not investment advice, and risk always applies. Today, we're breaking down Gemini Space Station's Q3 2025 earnings, and the headline here is pretty clear. Revenue is absolutely surging, but that growth comes with a price tag. Let's get into it.
Okay, before we jump into the profit and loss statement, I want to start with one massive number that really sets the stage. $21.3 billion. That's how much in assets users are currently trusting on Gemini's platform. I mean, that's a huge vote of confidence, right? It really gives you a sense of the sheer scale we're talking about here. So here's how we're going to tackle this. First, we'll look at that incredible revenue performance. Then we'll dig into profitability and their investment strategy, basically the cost of that growth. And finally, we'll wrap up by looking at the company's outlook for the future.
All right, first up, revenue performance. And honestly, the story here is, well, it's pretty impressive. Gemini isn't just seeing steady growth. It feels like they're really hitting an acceleration phase. A couple of key engines are just firing on all cylinders.
And you can see that acceleration crystal clear right here on this chart. Transaction revenue practically doubled from last year, jumping from $14.6 million all the way up to $26.3 million. That's not just a small increase, folks. That's a powerful signal that user activity on the platform is just going through the roof.
So what's fueling this revenue rocket? It really comes down to two main things. First, retail trading volumes are up a very healthy 16%. But the real showstopper, that's their credit card. Revenue there grew by a staggering 226%. Just wow. And this quote from their filing really says it all. The Gemini credit card isn't just some side project anymore. No, it's becoming a central piece of their strategy. They're moving beyond just trading and building a full-on financial services platform. That kind of diversification, that's a massive strategic win for them. Okay, so we've established revenue is booming. Fantastic. But what does that mean for the bottom line, for profit? Well, this is where the plot thickens a bit, because Gemini is making a very deliberate choice to spend big to grow big. It's all about strategic investment. Now, despite that huge revenue surge, if you look at their adjusted EBITDA, you'll see the loss actually got a little wider, from about $50.7 million last year to $52.4 million this quarter. At first glance, you might think, hey, that's not good, but it's actually all part of the game plan. Let me show you exactly where that cash is going.
See, they're not just burning through money, they are strategically reinvesting it. A lot of it is going into sales and marketing to get new users in the door. They're also spending on G&A, building out their corporate backbone. And maybe most importantly, they are doubling down on launching innovative new products to stay ahead of the competition. So here's the key takeaway for this section. Gemini is making a very calculated trade-off here. They are purposefully plowing those revenue gains right back into the business. It's a classic playbook for a company in a high-growth phase. You prioritize grabbing market share and building a technological moat over showing a profit right now.
So they're spending big. We get that. But the big question is, can they sustain it? And that brings us to their future outlook. And if you listen to what management is saying, it sounds like they've got more than enough fuel in the tank to keep this engine running.
This quote right here is really the linchpin. They're stating very clearly that they have enough cash on hand to fund all their plans for at least the next 12 months. That is a huge statement of financial stability, and it's what allows them to be so aggressive with their growth strategy.
And what does that strategy look like going forward? It really comes down to these three pillars. 1. User acquisition and retention. Get them and keep them. 2. Product innovation. Keep building cool, useful stuff. And 3. Strategic partnerships. Find the right allies to grow even faster. It's like a three-pronged attack to really solidify their place in the market.
So, to wrap up their outlook, the message is clear. Gemini is playing the long game. They're leveraging their strong cash position to be on the offensive, investing heavily in growth today so they can be a dominant player tomorrow.
So, what's my verdict on the quarter? I'd call it a quarter of calculated, aggressive expansion. Gemini is really flexing its financial muscles, using that strong revenue growth as fuel to make a bold play for future market share. The short-term loss might raise an eyebrow, but it seems to be the price they're willing to pay for long-term ambition.
And it's a bet they can afford to make, with at least a year's worth of cash to back it up. What are your thoughts on this growth over profit strategy? I'd love to hear them.
If you found this analysis helpful, do me a favor and just drop a 1 in the comments below. Thanks for tuning in, and I'll see you next earnings.